Oil held losses near the lowest close in more than 3 weeks as investors weighed expanding U.S. crude output against an extended decline in stockpiles during a period of strong seasonal demand. Futures were 0.4% lower in New York after falling 4.2% the previous 3 sessions. U.S. production had its biggest weekly gain since the end of June, climbing to the highest level since July 2015, according to Energy Information Administration data Wednesday. The increase offset the price impact of an 8.95 million barrel decline in crude stockpiles, the biggest drop since September. Oil this month has fluctuated in the tightest range since February as output cuts by Organization of the Petroleum Exporting Countries and its allies drain a global glut more slowly than expected. While U.S. stockpiles have declined for 7 weeks, they still remain about 80 million barrel above the 5-year average. On the current weekly trend, U.S. production is only about 4 weeks away from reaching the production high of June 2015. West Texas Intermediate for September delivery was at $46.61/barrels on the NYMEX, down 17 cents in London. Total volume traded was in line with the 100-a-day average. Prices lost 77 cents to $46.78 on Wednesday, the lowest close since July the 24th. Brent for October settlement slipped 11 cents to $50.16/barrel on the ICE Futures Europe exchange. Prices decreased 53 cents, or 1%, to $50.27 on Wednesday. Brent crude traded at a premium at $3.38 to October West Texas Intermediate. U.S. crude output rose by 79,000 barrels per day last week to 9.5 million barrels of oil per day, the Energy Information Administration reported. Crude stockpiles at Cushing, Oklahoma, expanded a second week to 57 million barrels. Gasoline inventories climbed by 22,000 barrels to 231 million. A U.S. government auction of offshore oil and gas leases in the Gulf of Mexico drew just $121 million in bids on Wednesday, a 56% drop from a March auction that offered less acreage. Oil prices will struggle to rise above $60 a barrel during the next 5 years because of plentiful supplies from both OPEC and U.S. shale. Saudi Arabia, the world's biggest crude exporter, shipped the least oil in almost 3 years in June, just as domestic stockpiles are dwindling. OPEC's effort to end a worldwide glut seems to be flagging. For the second straight month, the group's compliance with agreed production cuts stayed below 90%, as nations including Saudi Arabia pumped slightly more crude, and others, such as Iraq and Algeria, still haven't trimmed as much supply as promised.